30 pools that they fixed had problems. The dye that they put into the plaster that was shot on the side of the concrete started to fade. And so instead of these beautiful blue or green or even black pools, it had very streaky colors. And they were not looking for a tie-dye look in the pools. And their customers were really unhappy. There were complaints to the registrar of contractors. They were not getting paid. A couple of the owners had sued them for damages, and they needed help. My partner, who does a lot of construction work and does a lot of business work, gave him a little advice and then came down to talk to me because unlike the folks who do construction and collections, I do insurance stuff. And they asked me, what can we do? What can I do to help? So I had them bring in their insurance policy. It was a standard CGL policy, Comprehensive General Liability Policy. And they put me in touch with the manufacturer of the dye they used in the plaster. The manufacturer said, you know, we're a mom and pop company here in Southern California. We don't have the resources to cover the hundreds of thousands of dollars that you're going to have to repay. Sorry. So I spoke to the general manager of that little company, actually the president and owner, and asked him to send me a copy of his business insurance policy. And sure enough, as I looked through the policy, there appeared a couple of things that would provide some funds with which to settle our client's claim. And I looked through our client's policy and found a couple of things that would help them in fending off the lawsuits that hit them and to try to resolve things with the homeowners with using not their own funds, but insurance money. That's the sort of practical thing that I want to talk about, how it is that you can use the insurance policies you have in your business to help you in doing your work. You will find in the beginning of the materials a couple of examples that we use to sort of set the stage. One has to do with a similar situation as that I described, where the company, as a subcontractor, installed cabinets. They were accused of doing a slipshod job that affected the work of other contractors. General contractor refused to pay. In fact, they were sued or countersued when they wanted to collect what was owed to them. Our second example has to do with a large construction project now completed, and a whole bunch was unpaid. But the owner claims the work was unacceptable, was too shoddy, we're not going to pay it, and says it's not only do I want you to tear it all out, I want you to fix the damaged work of other subs that your work caused. This is when my counsel might be helpful to you, to try to trigger a little insurance coverage that will help you resolve those problems. For that, let's look a little bit about, I want to teach you some fundamentals of insurance. I can get to the end right away and tell you this is kind of what you need to do, and we'll get to that. But I think it's important for you to understand the why, because once you understand the why we do the things that we do, it's much easier to make sure we do them right. And so let's do an overview of the types of insurance that most businesses have, if you would please. Not that one. This should be the PowerPoint. Yep, thank you. You're probably familiar with most of these types of insurance. Some of them are personal lines and some of them are commercial. Workers' comp is something you're familiar with. Every company by law has to have workers' compensation insurance. If someone who works for you is injured on the job, they get to make a claim against you. Your fault, someone else's fault, nobody's fault. You've got to pay. At least in the state of Arizona, if you don't have workers' compensation, the state comp fund will step in and pay benefits to the injured worker. They will then come back and try to sue your company to get the money out of pocket, because every business is required to have workers' comp insurance. There's also commercial automobile liability. Any company who has vehicles will need insurance to protect them from the claims of other persons in the event that your employee is negligent and causes damage to someone else. You have that on your own personal car. You have liability coverage on your own vehicle. The beauty of it is if you use your own vehicle for company work, you get the benefit of the company policy stacked on top of your policy. So if for example, you blow a light and someone is killed as a consequence of it, and you have $100,000 liability coverage or protection on your own policy, that is probably not going to be enough, and your own assets are at risk. But if you're working on behalf of the company and they have a commercial liability policy, which usually has limits of $1 million or more, you have that extra protection. And every company needs to have it. There's also inland marine insurance. That's a strange name because marine insurance traditionally is what Lloyd's of London issues. That is, when cargo is being transported by ship from the United States to Japan, and if the cargo is lost at sea, inland marine insurance will reimburse the owner for the damaged goods. Inland marine means that that same sort of coverage is afforded when materials or equipment is trucked to you or moved by any means. Once title passes, that is, once you get the invoice and you pay it and it's being shipped, it is your property. Inland marine insurance protects you from that. Builder's risk insurance comes into play once the goods have been delivered to your work site. Inland marine insurance ceases to have coverage. Your normal property or fire insurance does not insure materials that are on the job site and not yet made into a building. And so you have what's called builder's risk insurance, the purpose of which is to reimburse you if your materials are vandalized before it gets built. You hear of umbrella coverage. That is also known as excess coverage. Umbrella coverage is very, very cheap compared to other insurance because it is not triggered until there is a retention that's already been paid out. In the example of the vehicle I just talked about, if you have $100,000 in primary coverage and $1 million in umbrella coverage, you'll pay $8 per $1,000 for the primary coverage and about 12 cents per $1,000 for the umbrella coverage, because the chances of you going over $100,000 and getting into the umbrella layer are pretty slim. And so they adjust for that in the premiums. Most businesses will have umbrella coverage because it's so inexpensive. The commercial general liability policy is really the source that we're going to talk about that will help you with the problems and the issues that we've raised here. We call it a CGL policy, and that contains a number of different provisions. One is for bodily injury. That is, if someone who is a stranger to your work crew is hurt on the job site, your bodily injury coverage is triggered. That is, that the insurance company will pay claims up to the limits of the policy. Give you a couple of examples. You're a commercial contractor, you're building a a commercial building, you've dug a foundation, you haven't put the proper barriers up. A passerby walks onto the job site, falls into a hole and hurts themselves. If they're hurt badly, then they can sue the owner of or the possessor of the land, the owner of the job site, for damages that they suffered because it wasn't properly marked. The bodily injury portion of your policy protects you from that. Likewise, if a subcontractor's employee is hurt by one of your employees through negligence, that would protect you from that. Classic example is a case I once defended in which a carpenter was nailing a stud wall down into the concrete using a pneumatic nail gun. A plumber was working near the wall, and as he was crossing over the plumber stood up, and the nose of the nail gun hit the top of the plumber's head. And the nail, a 16-penny nail, went into his brain so fast and so hot that he did not know it had happened. He felt a little bump. There was no bleeding. It's very, very small. The brain cannot feel anything. And so he sued the guy with the nail gun as well as the manufacturer of it, because he worked for a couple of hours after the nail went in, and it wasn't until he went to a bar on the way home and sat on a swivel stool and found himself turning north without, the nail was magnetic, and that part of it's not true. But he went to the emergency room, and then this horrific X-ray of a skull with this nail in his head. In any event, bodily injury protects you from being sued for that sort of thing. Property damage coverage kicks in when someone else's property as opposed to their personal body is hurt. And so the example of the trench, if someone drives their car into the trench and damages the car, then the insurance coverage will kick in for property damage. Every insurance policy has what they call the duty to defend. There are defense obligations, which means that the insurance company will hire a lawyer to defend you, and that lawyer will be at the insurance company's expense. And that is true even if the insurance company wishes to settle for policy limits, tenders the $100,000 or $1 million, and the plaintiff turns it down and says, no, we want to go for more. Even after that happens, the insurance company still has to pay for a defense. And so because of the cost of legal services, which can run anywhere from $150 to $450 an hour, that is a great benefit under an insurance policy to have, in a sense, a free lawyer. Now, the lawyer will have his loyalties both to you as a policyholder and to the insurance company. If there's ever a conflict between the two, the lawyer is duty-bound to take your side only. And so, notwithstanding the fact that he's paid by the insurance company, he understands that ethically his duties are to you and you alone. So he can't do anything to hurt you or affect your coverage. That becomes important when we talk about the examples again down the road.